What's up, effortless investors, and welcome back to the channel. If you're new, in today's video, we're breaking down exactly how much my £2,000 dividend portfolio paid me in November 2025. Every winner, every loser, and what I bought and sold. If you're a beginner investor, or you're building wealth on minimum wage level contributions, or if you just like a bit of a nose through someone else's portfolio, this video is for you. Now, I'm not a financial advisor, just a 9-to-5 guy building wealth the effortless way. Timestamps are in the description if you want to skip straight to the dividend portion of the video, but that's enough rambling, let's get into it. Let's start with the big picture, or relative to your own portfolio, the medium to small picture, because my portfolio is now sitting at £2,177.32. But November decided to be that month. I'm down 2.7%, which works out to an unrealized loss of £61.16. Not ideal, not tragic, just the stock market reminding me of who's in charge. Now the good news. Even with this little November wobble, I'm still sitting on a total unrealized gain of 11.28%, or £219.38. So despite the occasional tantrum, the portfolio is still very much alive and growing. And sadly, this brings to an end my 6-month streak of nothing but green months. A beautiful run, a majestic run. A run I will absolutely be inserting into this video as a chart to mourn its passing. But hey, even the best streaks need a plot twist. So let's check in on the long-term mission, turning this modest little portfolio into a proper income-producing machine by the time I hit 60. As I mentioned before, right now I'm sitting at 11.28% progress, which is £219.38 of unrealized gains on a total portfolio value of £2,177.32. Not bad for something that started as a tiny financial seedling. Now, for comparison, I've been running a projection in the background. A very sensible, very spreadsheet-flavoured projection, based on starting with £100 and adding another £100 every single month until I'm 60. According to that model, I should be sitting at around 7.5% progress, or roughly £98.89 gained, with a projected portfolio value of about £1,898.89 at this point. Translating that into plain English, my actual portfolio is outperforming my sensible, grown-up expectations. And honestly, it feels quite nice to be ahead of future me for once. Now, speaking of outperforming expectations, let's slide gracefully into what I actually did with the portfolio this month. Because yes, there were changes. Some small, some rather dramatic. This month saw a significant sale. In fact, the biggest shake-up I've made all year. I waved goodbye to Palantir, which previously made up a chunky 11% of my entire portfolio. I sold 1.8 shares for £239.26, locking in a very respectable £163.11 profit. A proud moment, and also slightly emotional. For anyone wondering why I finally sold Palantir, the original plan was never to hold it forever. Back when my portfolio was only worth about £500, I jumped into Palantir hoping to catch a short-term wave I could eventually ride back into the rest of my portfolio. After holding it for a year, watching it climb, and feeling like I'd finally surfed that wave to shore, I decided it was time to lock in those gains, especially with the recent market drops looming on the horizon. Mission accomplished. Wave ridden, profit secured. I also tidied up a couple of smaller positions from the income pie. Greencoat UK Wind, I sold 18.6 shares for £18.80, taking a tiny £1.55 loss. Think of it as paying a small exit fee to declutter my portfolio. And then there's Main Street Capital, which I sold 0.3939 shares for £16.81, with a loss of 57p. Not ideal, but honestly, I'd lose more down the side of the sofa. So overall, a month of trimming, tidying, and making space. one big strategic exit, and 2 small spring cleaning sales, all setting up the portfolio for a more focused, streamlined future. Alright, with the spring cleaning of the portfolio done, let's move into something a bit more colourful, the EI growth pie. Because nothing says emotional recovery from selling Palantir quite like checking in on the part of the portfolio that's supposed to grow quietly in the background and not stress me out. So November wasn't exactly a fireworks display. The growth pie depleted by 0.5%, which works out to £7.74. Nothing dramatic, more of a polite dip than a disaster. Even with that little wobble, the pie is still sitting at an overall gain of 13.29%, or £171.50 since I started it. Not bad for something that I treat like a long-term houseplant. Water it monthly, hope it survives, and occasionally admire it when it looks healthy. So let's break it down. VWRL is up 11.76% overall, but dipped 0.95% in November. A tiny slide, like it just hit a patch of wet leaves. Next is EQQQ, the usual overachiever, is still up 17.01% overall, but decided to take a breather too, dropping 2.49% this month. Even the tech giants need a nap sometimes. And here's a twist you don't usually hear in this section. Instead of the regular £75 monthly contribution, the growth pie got a surprise bonus. I reinvested an extra £144 from the Palantir sale, giving this slice a proper feast instead of its usual pocket money. So yes, November might have been a small red month in performance, but in terms of contributions, the growth pie has never been happier. Now that the growth pie has had its moment, let's wander over to the EI income pie, the quiet, dependable part of the portfolio whose job it is to pay me for simply existing. But November wasn't the most glamorous month here either. The income pie lost 0.5% as well, which comes to £2.32 lost. Barely a wobble, more like it sneezed if anything. Even so, the overall performance is still very positive. I'm sitting on a 4.81% gain overall, or £21.98 since starting this slice. Let's dive into the individual assets. Starting with JGGI, which is up 4.25% overall, but November said nope, with a 2.56% dip. Next is VHYL, up 8.22% overall, which actually held firm this month with a 0.74% gain. Moving on to BAE Systems, up 6.17% overall, but it had a dramatic 12.14% drop in November. Then we have British American Tobacco, up 21.19% overall, and a strong 10.49% in November. New addition BT Group follows suit, up 3.06% overall, but dipped 1.95% this month. HSBC continues to climb, up 6.89% overall, with a 1.14% bump in November. TSLD comes in with a loss of 5.67% overall and a loss this month of 7.16%. And yes, this is the newest addition to the pie, added as an experiment to see whether a 70% dividend payer can outshine its own volatility. Early results? Let's say the volatility is definitely doing the heavy lifting. Stay tuned though to find out how much it paid this month. JEQP is up 5.98% overall, with a loss though of 1.38% in November, whilst JEIP is up 2.49% overall, and did go up slightly this month at a calm 0.60%. Legal and General has rebounded, now up 1.71% overall for me, and 2.03% in November. National Grid is now up 9.53% overall for me, but it did dip this month with a loss of 0.65%. Much like the growth pie, instead of the usual modest £30 monthly contribution, the income pie enjoyed a bonus £72 reinvestment from my Palantir sale, a rare payday for this slice of the portfolio. So even though performance wiggled downward a bit, the income pie itself has never felt more well fed. Let's glide over from the calm, dividend-loving income pie to something a little more adventurous, ARKK. If the income pie is the dependable tortoise of the portfolio, ARKK is the caffeinated squirrel. Fast, unpredictable, and occasionally hurling itself off metaphorical branches. This month, ARKK delivered a very ARKK-like performance. A dramatic 11.62% drop in November. Classic behavior. That's the price of innovation. But zooming out, the bigger picture is actually much kinder. ARKK is still up 5.25% overall for me, which translates to £6.17 overall since I added it to the portfolio. So despite November's acrobatics, my position is still in the green. Bruised, maybe, but not broken. ARKK remains my little slice of chaos in an otherwise sensible portfolio. And honestly, I wouldn't have it any other way. Now, after surviving the caffeinated squirrel that is ARKK, it's time to check in on Rigetti Computing, my tiny quantum moonshot, otherwise known as the part of the portfolio that keeps me on the edge of my seat. November was, let's say, dramatic. Rigetti dropped 35.91% this month. Yes, you read that right. It took a proper quantum tumble. But before you panic, remember this is exactly why it's a moonshot. Expect thrills, chills, and occasional spills. Zooming out, the story is still incredible. Rigetti is sitting at 199.10% up overall, which is £19.87 in gains. In other words, despite November's rollercoaster, this little position has nearly tripled since I first bought in. It's chaotic, unpredictable, and occasionally terrifying, but also wildly exciting to watch grow. Rigetti remains my portfolio's fireworks display. It's unpredictable, flashy, and absolutely not boring. After the quantum rollercoaster that is Rigetti, let's land back on solid ground and check in on the part of the portfolio that actually puts money in my pocket. The dividends. November was a light month in terms of the number of payers. Only 5 assets chipped in. But don't let that fool you. This was actually my third best dividend month of the year. Apparently, quality beats quantity when it comes to pocket change. So here's the breakdown. JEIP paid 10 pence. JEQP paid 13 pence. British American Tobacco came in third place with a dividend of 25 pence. Second place went to SMIF with 68 pence. But in the top spot was newcomer TSLD with a nice £1.18, which to date is the third highest single dividend that I have received. The total income for the month was £2.34. Small in absolute terms, but a delightful little reminder that even a handful of payers can make a difference. It's the kind of month that proves dividends are like tiny dependable friends. You don't need many, just the right ones. Now that we've counted the little dividend helpers, let's give a round of applause to this month's superstar, the asset that carried its weight and then some. British American Tobacco. Bats didn't just sit there like a polite investor, it strutted. For November, it delivered a 10.49% performance, a proper showstopper. And on top of that, it chipped in a sweet little dividend of 25 pence. Basically, it both grew and paid me, which is the financial equivalent of baking cookies and cleaning the kitchen afterwards. So hats off to Bats, the star performer of November, proving that even a small slice of your portfolio can do the heavy lifting when it counts. Of course, every portfolio needs a little drama to keep things interesting. And that brings us to this month's worst performing asset. Drumroll please. It's Rigetti Computing, our tiny quantum rollercoaster. November saw it take a 35.91% dive, reminding us that moonshots come with moon-sized risks. But here's the thing. I bought this for the thrill, the upside potential, and the learning experience, and Rigetti is doing its job perfectly. In a portfolio of mostly sensible, slow-growing assets, it's the chaos agent that keeps me awake and invested. So, after celebrating Bat's strut and surviving Rigetti's quantum rollercoaster, that's a wrap on November 2025 for my £2,000 dividend portfolio. If you enjoyed this peek into my portfolio, the highs, the lows, and the tiny financial victories, hit like, subscribe, and follow along as we continue growing this small portfolio into something that one day could pay a bill or two, without me even lifting a finger. Remember, investing isn't about speed, it's about patience, consistency, and occasionally riding the chaotic quantum squirrel that is the stock market. See you next month for another update, hopefully with more gains, fewer tumbles, and more dividends. As always, keep it simple, keep it realistic, and keep it effortless.